What is going on, guys? Today in this video, we are going to be talking about Meta stock. So Meta just released their Q2 earnings, and we are going to go in depth on what is going on with Meta. So first, we're going to take a look at the chart. We're going to talk about a little bit of the news of what's going on today because the market's been absolutely crazy. And you can even see here, right? The stock moved up 6.5% today and then moved down 4.3% after hours. So it's just been a crazy day overall. The other thing that I want to talk about real quick is I hope you enjoy the sound of basically my voice now, because before I was using my computer mic and now I recently just got a mic, an external mic. So I hope it's sounding a lot better. I don't know how you guys lasted so long. I didn't get a single comment complaining about my mic, and I don't know how. I was waiting for someone to complain about it and no one ever did. And finally, I just got sick of listening to the echo that was going on. So hopefully this is a whole lot better for you guys. If it is, make sure to drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So like I talked about there in the intro, Meta was up 6.55% today, an absolutely crazy move. A lot of these large caps today, you look at Google, Apple, all these large caps had crazy moves today in the market. And overall, there was just a lot of positivity, a lot of things going for it. And all of that came on kind of the back of the Fed meeting, which we'll get into some of that here in a little bit. But right now, we're just taking a look at Meta's chart. So 6.5% move up today. And then after hours, they are down 4.5%. So basically giving back all of their gains. If we look at the last 5 days, they're down over 6%. Again, just kind of continuing to sink down and down. And then let's look at the last year. They're down quite a bit from their all-time highs, or their highs of 52 weeks of $384 and their low of $154. So a lot of negativity, but overall, you know, compared to last earnings where they kind of just tanked through the floor, like you can see in here, you know, so far, not a huge move. I think tomorrow we'll probably see another downward move from Meta just because of what we're going to get into here from the earnings. So here we have a big picture of the earnings, and we'll dive more in depth later in the video. But what we have for EPS, they were expecting $2.55 and reported $2.46. This was a miss of minus 3.6%. In terms of revenue, they were expecting $28.95 billion and only reported $28.82 billion. So not a huge miss there, a relatively, you know, small, decent miss in terms of their earnings per share. So here we have some more in-depth information. So Facebook parent company Meta reported their Q2 2022 earnings after the close bell on Wednesday, falling shy of analyst expectations and missing by a wide margin on its Q3 revenue forecast. So that's a big statement right there, right? So in terms of Q2 results, nothing really super surprising, but Q3, they had a very, you know, wide miss in terms of their forecasted revenue for Q3. On top of that, net income also fell 36% year over year. So that is absolutely huge, right? Part of that I'm not overly concerned about, right? So their net income did fall, but they are spending a ton of money investing back into the business, right? The metaverse has been their big focus. So overall, they've been plowing a ton of money back into growing the metaverse, growing kind of that side of their business. So that is something to consider that, you know, of course, yeah, their income did fall quite a bit, but it also is being, you know, spent in other areas. It's not like it's all because they lost consumers or they're not basically getting as many advertisers. It more has to do with the reinvestment that they're putting into the business. So we touched on these numbers already, but again, they had a revenue of 28.8 billion versus what was expected of 28.9 billion. So again, not a very large miss there. And then earnings per share, they reported $2.46 versus the $2.54 expected. And then something that's always tracked with Facebook is, you know, how many daily active users, and then they also normally track monthly active users. For daily active users, they had 1.97 billion versus 1.95 billion. The difference, you know, if Netflix or someone, you know, similar to Netflix where they're a high growth type of company, a lot of these numbers get a lot of focus, right? The active users. Facebook is a lot more secure in their user base, right? They aren't growing, huge amounts of users. They're basically kind of capped out on their number of users. I mean, they have like 3 billion monthly users. So, compared to the 7 billion people, 8 billion people that there are on the earth, they really don't have a ton of room left to grow, So overall, this number is not going to move the stock a whole lot. We have 2 points up here that really have a negative effect on the stock. So yeah, they missed a little bit on earnings. Yeah, they missed a little bit on revenue. Nothing too crazy. All companies right now are really kind of missing on earnings and revenue. What a lot of companies though have been doing, they have been forecasting better results for Q3 or Q4, whatever they have quarter they have coming up. But Meta has kind of had the opposite approach. And this could be good in the long term, right? If they actually end up beating some of these forecasts. But in the short term, there's going to be, some pain that goes along with it. So Meta Q3 revenue forecast fell short of analyst expectations, coming in at between 26 billion and 28.5 billion. So Wall Street was looking for 30.32 billion. So overall, a lot of negativity with that number, right? They're predicting, over $2 billion in missed revenue compared to what Wall Street was predicting. And again, this has a huge negative impact because we've seen a lot of these other tech companies come out and kind of predict higher, at least give guidance, a little bit higher, Microsoft being a big one. And then Meta, turns around and says, no, we're still expecting things to get worse. So it's kind of a question of, are they going to be right? And are they going to, be down at the, close to the 26 billion mark? Or, maybe they'll end up beating and actually end up closer to that 30.3 billion that Wall Street was predicting. Only time will obviously tell, but, that'll have a drastic impact next quarter when they report, because these expectations are already going to start being baked into the stock price. And the last thing up here that we have is the Federal Trade Commission announces it is seeking an injunction to block the social media company's acquisition of Within, maker of a virtual reality fitness app Supernatural. So the commissioner basically said, or John Newman, deputy director, he said that Meta already owns the best-selling virtual reality fitness app, and it had the capabilities to compete even more closely with Within's popular Supernatural app. So basically saying that, Meta had the capability and was in position to, compete with Supernatural, and instead they decided, no, we're just going to try and buy it out. So the Federal Trade Commission obviously doesn't like that. They want to create competition in the marketplace. And right now it's basically surprising with how much market share in terms of virtual reality that Meta actually has. In terms of the Oculus and headsets, they have, I forget the exact number, but it's like over 50% of headsets that are purchased for virtual reality use are made by Meta. So they are, the top player in the industry. And obviously the Federal Trade Commission is looking at, something like this, where they had an app they were basically working on, and it was, one of the best sellers in terms of fitness. And instead they were like, no, let's just buy this company Within and, use their app Supernatural and bring that into, Meta. So overall, that's obviously going to be seen as a negative. Meta has been one of those companies, though, that has ran into the Federal Trade Commission a few times. So we could still see this deal go through, but basically the Federal Trade Commission is saying that they're going to attempt to block this acquisition by Meta. The last thing that I wanted to touch on in this video is how crazy the market has been and why it's been so crazy today. So, right, the Fed, if you don't know, the Fed announced a 0.75 rate hike. So Jerome Powell also, and this is why the market went up so much, Jerome Powell hinted at the central bank slowing the pace of rate hikes. So basically he came out and said that we are thinking about, not increasing rates by so much. So they had a 0.75 rate increase last month, and now they had a 0.75 rate increase this month. And basically he's looking at it and saying we might be going up too fast, and this could hurt us, in the long run. So again, that's it's good that he's looking at that far ahead, because a lot of these rates, you really don't see the impact on a lot of these for 3 to 6 to even 8 to 12 months, because you can only gauge the economy. A lot of the inflation numbers are year over year numbers. So it's hard to gauge exactly where the economy is going year over year when you're basically comparing it versus a number that is a year old. So you don't want to, if you're the Fed, you don't want to end up in a situation where you've increased rates so much so quickly that now you're trying to play a catch-up game and having to lower rates back down. You want to try and gradually kind of work your way into it. So with a lot of the fear that's been in the market, the Fed's kind of been pushed to, be very aggressive. And I don't think that's necessarily wrong at this point, but I also like that, Jerome Powell is, understanding that this is a long-term game. It's not about getting there overnight. It's about, making sure that we can kind of slow things down at a good pace so that we aren't, overshooting our target. And then he also had another good statement down here. So he said, Powell said that he did not believe the U.S. economy is currently in a recession, but acknowledged recent data reflecting some softening. So basically said, he doesn't think we're in a recession now, but, there is some softening and there's the potential to go, towards a recession, which, if you think about it and just listen to that quote, it might sound like a negative thing, but what people are seeing is, right, that Jerome Powell is acknowledging that there is the possibility of a recession, which means he with his, ability to control the economy and control the money supply, that he can understand that and, understand what he needs to do now to potentially, prevent that from happening. So that is kind of why the market reacted so positively today. I mean, you could see some of these numbers: Microsoft up over 6%, Baba up over 1%, Google up over 7%, almost 8% there. The S&P 500 up 2.6%. So overall, a really positive day, a really good day for the market to kind of bounce back in there. If I had to make a prediction, I would guess that tomorrow is going to be the opposite. I would guess that tomorrow we will see a large downward move. I mean, Meta obviously had poor earnings, so we could see that affect some of the market. And then we'll see, a number of other players. I believe Apple and Amazon announced tomorrow. I don't remember if it's before or after the market. So depending on how, those go, how Apple and Amazon, how their earnings go, we could see, a wide range of activity throughout the market. They're going to have a huge move. If they report something bad, we'll definitely see the market down. If they report something semi good, I think we'll probably see the market up, but not up nearly as much as it was today, because a lot of this positivity is already being baked into the market. So I hope you enjoyed the video. If you did, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. And as always, have a wonderful rest of your day.